Hey everyone, I'm Dean, and welcome back to the channel where I break down the latest trends shaping real estate and smart investing. If you're watching this, you're likely wondering what's really going on in one of the GTA's most dynamic industrial markets. In this video, we're breaking down the Q2 2025 Toronto East Industrial Market Report. So whether you're an investor, a business owner, or just curious, stick around because the data is telling a fascinating story. Let's start with the big question. Is the market crashing, or is it stabilizing? After a period of historic volatility, driven by the pandemic, e-commerce booms, and rising interest rates, the Toronto East market is finally showing strong signs of finding its footing. The report suggests we may be very close to, or even at, the bottom of the cycle. The drop in availability and the strong absorption of over 1 million square feet means tenants are actively leasing space again. But rents have softened slightly. This creates a market that's balanced. Tenants have more options and negotiating power than they did a year ago, but the underlying demand is still very much there. Absorption over 1 million square feet this quarter is a sign of real demand recovering. So overall, lower availability, strong absorption, slightly softer rents, balanced market. That balance creates opportunities for both tenants and investors depending on risk tolerance and timing. Key takeaways: stabilization signs, active leasing, and softening rents. Now let's look at why activity is concentrated in the East. So why is all this activity focused on the East? It really boils down to 4 key advantages. Relatively affordable land. Compared to the core GTA, it's still a value play. Available land, there's simply more room to build and develop. Competitive costs, lower development charges make projects feasible. Critical access, immediate proximity to highways 401, 412, and 407 is a logistics dream. This mix keeps institutional investors and growing businesses coming back to the corridor. Now let's talk deals. What's actually trading hands? Sales. 4 major user sales averaging $281.50 per square foot. This tells us that for the right property, owner users are still willing to pay a premium. Leases. 5 major leases signed, totaling nearly 1.27 million square feet. Rents ranged from $12.75 to $17.95 PSF, averaging $15.73. The takeaway? There's a healthy spread in the market. Price and rent depend on property's age, size, location, and specs like clear height and dock doors. Perhaps the strongest vote of confidence in the long-term health of this market is the sheer scale of developments breaking ground. In Whitby, Carterra is building a 343,000 square foot spec building targeting LEED Silver and net zero carbon. Triovest in Pickering is developing a 270,000 plus square foot multi-unit facility. The massive FGF Brands campus in Pickering is a over 1 million square foot food manufacturing hub with integrated AI and robotics. And Panattoni has proposed a colossal 1.6 million square foot industrial campus in Whitby. Developers are playing the long game, betting that long-term demand for modern, efficient space will hold. These projects are proof that the corridor is being built for the future. For investors, focus on properties with strong fundamentals, modern design, great access. Think long-term hold. For business owners, now is a great time to look. You have more options and negotiating power. Scrutinize lease terms and TI allowances. For landlords, quality and communication are key. Focus on tenant retention and consider flexible terms. Expect rents to stabilize with typical annual escalations of 3 to 3.5%. Property values softened with rents, and land pricing is moderating. If you found this breakdown helpful, please give this video a thumbs up and subscribe. What's your take? Buy, sell, or lease? Let me know in the comments. Reach out to me and the team today. Let us assist you in finding the ideal space for your venture, because a great location is the foundation of every successful business. Thanks for watching, and I'll catch you in our next video.